Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Stablecoin regulation is no longer a theoretical debate. The Genius Act has cleared the legislative path, but execution remains the hurdle. Executives from MoonPay, Ripple, and Paxos gathered at Consensus Miami 2026 to admit that while regulatory clarity is finally here, infrastructure gaps still block mainstream adoption. BlackRock is amplifying this pressure. The asset manager is urging the Office of the Comptroller of the Currency to drop the 20% tokenized reserve cap. They cite $6.2 trillion in global money market fund eligibility as the justification. This push aligns with the Genius Act's framework, signaling that institutional stablecoins are moving from pilot programs to core treasury operations. In the crypto equity space, Strategy is executing a stark pivot. The company plans to sell Bitcoin to fund $1.5 billion in annual dividends. This move follows a $14.46 billion markdown in the first quarter. The shift from maximalist holding to dividend funding marks a structural change in how public companies treat digital assets. It transforms Bitcoin from a pure store of value into a yield-generating liability. Meanwhile, China is doubling down on semiconductor independence. Baidu's AI chip unit, Kunlunxin, is targeting a $14.7 billion valuation in a dual listing across Hong Kong and Shanghai. This IPO signals Beijing's aggressive push for self-reliance amid ongoing U.S. export restrictions. The valuation reflects the premium placed on domestic AI infrastructure capabilities. In European equities, Deutsche Telekom is leading a Quant surge. The telecom giant tops seeking Alpha's foreign Quant rankings with a 4.90 score. This outperformance comes amid broader European telecom restructuring. Investors are rotating into established infrastructure plays that offer stability and yield in a volatile macro environment. Looking ahead to today's release, inflation data from China will set the tone for Asian markets. At 1:30 Universal Time Coordinated, China releases its inflation rate year-over-year. The forecast stands at 0.9%, down from the previous 1%. This slight deceleration suggests persistent deflationary pressures in the world's second-largest economy. Also at 1:30 Universal Time Coordinated, China publishes its producer price index year-over-year. The forecast is 1.7%, up from the previous 0.5%. A rise in PPI could indicate improving demand in the industrial sector, offering a counternarrative to the softening consumer prices. On the European front, the ECB's Cipollone will speak at 9:30 Universal Time Coordinated. While marked as medium importance, speeches from key policymakers often influence short-term Eurozone bond yields. Traders will listen for any hints on the pace of future rate adjustments. The interplay between crypto regulation, Chinese tech IPOs, and macro data creates a complex trading landscape. Stablecoin infrastructure is maturing. Chinese semiconductor valuations are rising. And macro indicators are sending mixed signals. Investors must navigate these shifts with precision. That's your market briefing. Follow Rumour with AI for daily market intelligence.